On the last week, gold traded as low as 1568 and as high as 1632. Numbers are rounded and the market is closed. And on the last trading session of a Friday, gold spot printed a closing price above 1617. The number is rounded and the market is closed. In terms of the daily simple moving averages, gold is trading in a bull trend and it's above its all daily simple moving averages, and the momentum is still seen strong. For the RSI readings, it's moderate on all the charts. We have 54 on the daily chart, 57 on the weekly chart, and 72 on the monthly chart. Nothing to worry about from this side. And for the supports are seen about 1585. If broken, you will go to 1550. If broken, you will go to 1500. And for the resistance levels, we have 1650. If it can be cleared, then the market most likely will go to 1703, then to 1750. That's all. Move on now to the calendar. On the economic calendar for the coming weekend from the United States, we'll be waiting for the following economic headers to be released. The JOLTS job opening for February, this will be released on Tuesday. Then the FOMC minutes, meeting minutes will be released on Wednesday, and the jobless claims, PPI, and CPI on Thursday and Friday. That's all. We'll move on now to the trading strategy. Hi again. We are going to start our video with some definitions in order for us to understand the picture of the global economy at the moment. We are going to start with the definition of the recession. The recession is defined as a significant decline in the economic activities for a few months, and this decline usually reflected in higher unemployment and lower economic indicators. I mean, all the other economic indicators will be lower than their averages. The global economy is seen now by the economists and analysts is seen in a recession. Even the IMF declared that the global economy is in recession. This is a part of the story, and this is not the worry. The worry is where we are heading from here. Most of the economists they are like in agreement almost that the global economy is going to pass through something called stagflation, and stagflation is very complicated state of economy where the prices of goods and services increase significantly in an environment of a recession where the unemployment is high and the business economy or activities are declining in a noticeable manner. So you will get some money or so much money in the hands of the people, and there are a few goods and services. This is a one side, and the other side you have a decline in the business activities. On the last week, we got the figures about the labor's market in the United States, the non-farm payroll, and the jobless claims, and it told us about of what happened in a period of 2 weeks of lockdown. And it's going to be much more worse than what we have seen if this lockdown is continuing. And also in the last week, we talked about oil, crude oil, as an opportunity to buy. I was aware actually that technicalities of crude oil is pointing to 17 or below, $17 or below per barrel, and this risk is still standing. But you look at the matter on the different eyes. I believe that capitalism cannot afford cheap oil, and be aware that the cost of producing 1 barrel of crude oil for the United States is like 40 to $45, which means the United States, if the cost is a war, it's going to be a war just to lift the price maybe above $45, or you are going to simply execute the energy sector of the United States. At the moment, there is a lockdown of almost half of the world. Half the world is sitting at home, and as far as I know, capitalism, the main system that rules the world at the moment, also cannot afford more than 2 weeks to 1 month of lockdown. The formula does not work. It's not like they don't want, but if the lockdown goes more than far beyond a month, it's going to be a financial collapse. So I do believe that in a week or two, we are going to see some countries back into business, including the United States. And still, I am positive on oil, as I said, and also the stock market. The U.S. Stocks also could see a relief rally. Since we talked about the stagflation in the beginning of this part of the video, the economic advice before arriving to the stagflation era is to move a big chunk of the cash that you don't use into real assets. I'm talking about a piece of land, gold, and silver, the real ones. In my opinion, and this is still theoretical, the time that the lockdown is removed, if you used to shop groceries for $100 and fill your trolley for $100, I think you will need $300 to $400 to buy the same goods that you used to buy with $100, which I mean, a big much of inflation is expected. For trading purposes, volatility is expected in both gold and silver. You could see, or maybe you will see some sharp swings of the price in both gold and silver in the coming week. Uh, I am not interested actually to trade either gold or silver next week, but if I get a dip for gold nearby 1450 or 1400, I'm a buyer. If I get a dip for silver nearby 12, I'm a buyer as well. Uh, I have no interest at all to short either gold or silver. We are in a shitty days. One bad headline could send gold $100 in a few minutes. I don't want to be taken by surprise. We have a conflicting situation. Look at the fundamentals. For example, you have the mining operations stopped in all the world. The senior miners have stopped their operations because of the spread of the virus, similar to any other businesses. And you got, on the other hand, the countries that does trade usually gold and silver in heavy volumes. I'm talking about China and India. Usually they do their transactions hand by hand, and these transactions is also stopped because of the spread of the virus and the lockdown. For the technicalities, you got a bull flag building up for gold and silver on the daily chart, but on the weekly chart, there is an obvious weakness. We got so many bad headlines last week, but neither gold or silver have shown any impressive moves. And we have some sort of a ceiling at the moment. For silver, it's about 15, and for gold, it's about 1640. Okay, if gold can close above 1640, buy it. If silver close above 15, buy it. But if it fails to, I think it will go down. There's always, as I say, another way around for gold and silver. It's commodities, they can go sideways for a long period of time. It's like from 4 to 8 weeks. They can trade sideways in a very tight range. Anyhow, I don't expect a massive move for gold or silver next week. I do expect this to happen maybe on late May. If there is a rally, it's going to take place at that time. At the moment, we are going to see this either sideways trading, or are going to see some sort of decline. That's all for this week. Thank you for watching. Be safe. I'll see you next week in another video.